Hey, so if you guys are new to trading or would like to take emotions out of trades, this video is going to be for you. Step 1, every pro/emotionless trader needs to have charting software to help identify trends and patterns. The charting platform that you see behind me is called TradingView. It's actually free, but you can always upgrade your plan, or you can use a free platform like Webull to do all of your trades as well as charting. The blue and the green lines behind me represent the 20 and the 50 exponential moving averages. Now these EMAs allow us to see potential support levels. Now, what do I mean by support levels? Well, you can see many times when the market dropped, but every time that the market dropped, for example, to the 50 EMA, we saw a big ass bounce. So with this knowledge, if you have a red day and then you saw that we're at the 50 EMA, you can say, hey, you know what? I'm going to go hold unless the 50 EMA breaks. If the 50 EMA breaks, then I'll sell, I'll get out. Maybe that's going to be a bear market, but I know that if it holds the 50 EMA, it's going to bounce up. Step 2, you guys have to have a plan for every single trade. In the chart behind me, we have the SPY, and what SPY did this morning is it literally dropped 2% all the way down to the key level, and look exactly where it stopped. Literally, this level held for almost 2 to 3 hours, and we know through patterns that if a key level holds, that it is due for a bounce. So in the last chart, we looked at the SPY, which looked to be due for a bounce. Now the SPY is the top 500 US companies, so it helps indicate where the market is going. This is going to be the QQQ. The QQQ is almost like the SPY, except it's more heavily towards tech. Now we talked about charting software and how charting software allows us to see patterns. Well, this is a pattern that we see in the QQQ. We see a channel being built, and in this channel, it goes up the channel, down the channel, hits the top, and then goes to the bottom. So when we saw QQQ drop today and it hit to the bottom of the channel, I was like, okay, no worries, just hold, and we want to see if this channel holds. If it holds, then it's ready for a bounce, but if it drops, then we can go ahead and exit and start looking for puts. So we talked about having a plan, right? So if you want to be emotionless, you got to think if X, then Y. So let's take this chart, for example. So if this channel holds, then we can see a bounce. If this channel breaks down, then we can expect probably a bear market, that we can expect the market to keep going down. So let's talk about the play that I picked for our 1K to 10K challenge. This one is MRK. This morning, when the market dropped negative 2%, MRK still gapped up and ended the day with positive 2%. If MRK is still making gains during a fat red day, what does that say about the stock? I hope you guys can answer that last question. Now, if you guys want to be part of our 1K to 10K challenge, we're giving you guys a special. We're giving you guys 7 days free, as well as $1 for your first month. Just use 10K TikTok in the link in our bio, and we'll see you guys there.